guys, yesterday we were able to look at the first part of the risks. We looked at audit department. So today we are going to look at the rest. Now, yeah, if you didn't hear me say good morning, I'm here to say good morning. Hope you slept well. Yeah, I slept okay. Yeah, so we can get started. All right, now we're going to warehouse and dispatch. So here in warehouse dispatch, we are looking at the next phase of the revenue and receipts cycle. I did send you my notes yesterday. My handwriting is horrible, especially that one. You see, once I start explaining things to myself, just know that things gonna be horrible. Well, but before I started explaining to myself, it was not horrible. It was okay. Because I saw Jacobs texted in the group, "What's a handwriting?" Yeah. Anyway, so actually, let me know if you can't see a few things. I can even send pictures. Maybe that would be better if I send pictures that I took. But the pictures that I took, because I made those pictures a PDF. But yeah. Anyway, if you remember yesterday we looked at the order department, and just to refresh our mind, I think let's just do that before we even move to the other cycle. So, order department, right? Order department, this is where we receive orders from customers, whether through phone, email, post, or over the counter. Over the counter, in person, right? And here, the we receive these orders from customers, and we set the orders in motion. So before processing, it confirms the customer's account is up to date within the credit limit and terms, and that the goods are in stock. If a customer is not within credit limits or terms, authorization must come from the credit management. If out of stock, the customer may agree to a back order. So here the order department is about what? Simply about we receiving orders from customers. And when we receive them, we check if the customer's account is up to date and if we have those goods in stock. If the customer is not within the credit limit, not up to date, the credit department management deals with that. And if it's out of stock, we may tell the customer we agreed to a back order. So that is the order department. Now we go to the credit management / sales authorization. So here, this is where the authorizes the shares by granting or confirming credits before the order proceeds. Companies don't want to make sales they won't be paid for. New customers complete a credit application. Existing customers are checked against their credit limits and terms. So I think that one says it's mostly checking if this customer can pay or not. It's possibly going to be like an age analysis and things like that. That will be there. Possibly given the credit terms, maybe given 60 days or whatever the credit term is, and we see if the customer fits or not. And if it's a new customer, they complete a credit application, and so on. Warehouse and dispatch, this is where we're now picking things up. We go to that warehouse, we pick. Yesterday we're using an example of the Volcano speaker. Go pick up that pink Volcano speaker and you send it to the dispatch area. dispatch section. So we made an example of you going to pick you're going to get your favorite gene at Mr. Price, for example, wherever you get your gene. Get that gene, and then you go to the till. So that's almost like the dispatch area. You see, it can be in the same building. It could also be in a separate building. That just depends on the company. So that is what the warehouse and dispatch is. If I can read, it says selects, picks the order per the it's a number, I don't know. Here it picks up the order per the internal sales order. So here in the internal sales order, it's usually very precise. Maybe it writes a pink will kind of speak of this kind. And I made an example of like how a barcode is very precise, and when you scan that barcode, it talks about that specific item, and most likely never find the same barcode, even for the same kind of speakers, even the same kind of pink speakers as well. So that is an example of maybe the internal sales order. And then with the turning sales order, we make sure that the picking slip and the internal sales order are the same. And controls, this is where we select the goods and controls the movement of goods from the custody, which is the storage section, to the dispatch section. 4. Dispatch is the delivery. This is where we release the goods to the customer, collected by the customer, delivered by the company's own vehicle, or sent via a transport company courier. A delivery note is signed by the customer to prove receipt. Made an example of, let's say you order online, and usually when you order online, whether you order pizza or whatever, they make you sign something, and that is a delivery note signed by the customer to prove that they have received that. Invoicing notifies the customer prominently of the amount due and when to pay it, matched back to the original authorized order and signed delivery notes. That one, I think, says it. 6 is recording sales and raising the debtor. Creates a record of sales and raises the amount owed as a debtor in the debtor's ledger. I looked at that yesterday, but it is simple like this. And then 7 is receiving and reporting payment from debtors. Receipts are made out for cash received. Receipts are recorded in the cash receipts journal, and the correct debtors account is credited prominently. The period total is posted to the debtors control account in the general ledger. Okay, and then the last one that we looked at is processing returns and credit management. So here controls goods returned by customer credited to the debtor's account and manages the overall risk of bad debts. Extending credit only to credit-worthy customers, setting sensible limits, and following up on slow payers. So that is just the gist of what we looked at yesterday. So now we can continue where we left off. Yesterday we looked at audit department. Now we're looking at the next step, which is warehouse and dispatch. So here, what is this? This is risk and internal controls function by function. So here we look at what can go wrong, the risks that can go on in the warehouse. What is a key activity we can use to control that situation, and what control objective is that? Where does that lie in? Control objectives that we looked at yesterday is validity, which is the transaction is authorized. We make sure that the transaction is authorized and actually occurred during the period with supporting documents. So that is validity. And then we have accuracy, which is the transaction is for the correct amount in the correct account and correctly summarized into the accounting records. We looking for accuracy. Completeness, all transactions that should be recorded are recorded promptly. Nothing is omitted. All right, so let's continue. So in the warehouse, what could go wrong? Let us see. Goods may be picked without a valid authorized picking slip, right? So it could be fictitious, unauthorized sales. So picking slips, so what can we do here? So the picking slips are printed, sequenced, and only created from an authorized ISO. Picking slip is cross-referenced to the ISO before submission for approval. The ISO is the internal sales order. So we compare the picking slip to the internal sales order before submission for approval. Why? Validity. So this is the risk that may happen, is that the goods we picked up, we may pick up goods without a valid authorized picking slip. So that's why we need to compare it with the internal sales order to make sure if it's the same thing. What else could happen here? Incorrect items or quantities picked or dispatched. So here, what could the key control be? Picker initials each item picked and marks out stock items on the picking slip. Supervisory checks carried out. Warehouse management signs to acknowledge control procedures were followed. Here is for what? Accuracy and occurrence. All right. And then what we have here is delivery notes. Delivery notes are inaccurate. What could go wrong here? Delivery notes are inaccurate or incomplete. Goods dispatched are not recorded on the delivery notes. So the key control activity here is what? Is delivery notes are matched and filed numerically. Unmatched picking slips are followed. Dispatch clerk prepares a delivery list matched to delivery notes. Gate security controls check goods leaving the premises against the delivery notes. Completeness. So here, the risk was the delivery notes are inaccurate or incomplete. And then goods dispatch are not recorded on the delivery note. So it could happen where those goods that we dispatch, that person might not write them on the delivery note. So we need to make sure that, like for example here, security controls checks goods before they leave the premises. So the security can also check, like you see how, like for example, if you go to the grocery store and then the security that checks your slip, right? So obviously the person at the till is checking and gonna obviously charge you based on what you buy. Then the security can then check that, okay, is this person actually leaving with what it says here? And sometimes the security even checks like, how you said here you bought a microwave, where's the microwave? And you might have forgot it, you know. So the security is not only entirely there to check theft, which is the main role, but it can also help if you maybe forgot something as well. So that is what that is talking about. Here, if the delivery notes are inaccurate or incomplete, what do? The delivery notes are matched and filed numerically. unmatched picking slips are followed up. Dispatchment clerk prepares a delivery list matched to delivery notes. Alright. What could go wrong as well here? Like I said yesterday, guys, there's actually way more. Your best friend is, I don't know if this auditing notes. No. Is it this one? Oh. Yes, your best friend is auditing notes, guys. You see here, they tell you the warehouse function, risk, control activities. This is just a summary. See, it can just be like, if we looked at here, we would not finish, you know. So this PDF is a summary. Some things might not be included, but definitely looking at this PDF, you can definitely be able to understand. But you cannot study auditing without auditing notes. That's for sure. You have to be able to look here because it even tells you, see the document records. It's just that it's upside down, you know. But yeah, you can, you know, tilt or whatever. But it just gives you that, and it really just does it well, guys. I'm not gonna lie, it explains it so well. It tells you everything here. So this is really your best friend. Anyway, let's continue. What else could go wrong? What else could go wrong in the warehouse and dispatches? A customer denies having received the goods. So, what is a key control here? Customer signs both copies of the delivery notes on delivery, and the company retains one signed copy. Driver returns it with the delivery record. What for? Validity. So here, if a risk that can happen here is a customer can deny receiving the goods. That's why you sign on delivery. That delivery note, when they tell you to sign, if you bought your pizza, if you bought whatever you bought online, your book, whatever, they make you sign so that it can be proof for them that you received it. But if they didn't make you sign, I mean, you could say you didn't receive it. I don't know. But yeah, um, yeah, good luck with that, to be honest. Hopefully it works out. If you want to go that route. But yeah, that's what could go wrong. So the risk of that and the key control, which is basically that's why we have this. See when it says the key control, is basically saying, okay, why is there such a process? Now there's like an ISO, there's a picking slip, cross, like, yo, it's so much work. But that is there to minimize all these risks. Because these risks are there and they do happen. Especially if you own a business, you want to make sure that these type of problems, knowing that you could control them, you would want to control them before this becomes an actual problem. So now we are looking at invoicing. In invoicing, what could go wrong? But before we move, guys, I just want to know if I want, like yesterday, like how we've been doing, just a yes or no. If you understand, you can unmute and say yes. If you don't, you can unmute and say no. Am I audible? Maybe I'm not even audible all this time. So, hey, what if, let me text everybody if I'm not audible. You can unmute and say yes if you understand. You can unmute and say no if you don't. So we can be able to move. We're actually almost done. And just a broad overview. Oh, Ngozi. Some Ngozi react and say yes. What are the others? Mati Nabai.
Bro,
Yeah.
so what I can ask that is that the key control activities is that are those things that can be used to minimize the risk that the company can incur in that department.
100%.
Okay. Okay. Thank you.
Alright. Alright, I think we can move. Thank you so much, guys. Let's go to invoicing and then we'll look at the others here. Alright, invoicing. So here in invoicing, same question. What is the risk? What is something that could go wrong here? So in invoicing, one of the things that could go wrong is invoices are raised with no matching delivery. So here it could be like, for example, they gave fictitious sale. So the key control activity would be invoice is cross-referenced and attached to the original authorized ISO and the signed delivery notes before being posted. Which the control activity is validity, right, occurrence. And you see, I'm noticing even a trend as I'm also reading. I don't know if you'll see it as well, but you see, there's gonna be like a lot of cross-reference, looking at um previous documents. Like, oh, if I compare this document with this document, is it the same? If I compare this document with this document, so those, if you're in a situation where documents are involved, I think those are one of the things that you should think about. Like whether they say cross-reference, whether they say in numerical order or sequence and things like that. Those are things to have in your vocabulary when you're about to write. Those are the words you should think about once we are able to have a written assessment for auditing. Is cross-reference, delivery, compare. You can even say compare. Cross-reference is almost almost the same thing. Um, so yeah, hope that
Bro, what do they mean when they say invoices are raised with no matching bill? They mean that invoices they can be false sales or something. What do they mean?
they can be what?
What do they mean? They mean false sales. You can they can be given like false sales or something.
When they say invoices are raised with no matching delivery.
Mm.
So yeah, fictitious sales. Fictitious sales. So they can be false sales. Let me see how that could possibly occur.
I think what they meant here is that the invoice should be the same as the delivery notes because you can't provide the invoice without payment. They have to pay you, that you have to submit the invoice and then you get paid. How are you going to get paid whereas the delivery notes is not the same as the invoice? So the invoice and the delivery must state the quantities ukuthi deliver how many things, and then invoice must state ukuthi lawo ma-quantities per quantity how much it costed and how much is the total cost of all those quantities. So the delivery notes and the invoice must be the same.
Okay, you mean the delivery note and the invoice needs to be same? Meaning, if the delivery note says mentions like quantity that you ordered, the invoice needs to also have the same thing.
Yes, because here, agree, you are paying for what you have, or let's say you ordered something, ne? Let's say you ordered 5 books and 10 pencils and
And then what?
10 pencils,
Or 10 pencils, okay.
yes, and 5 rulers. So
Okay.
yes, so the invoice should reflect all the items that you have ordered, and
Yes.
also the delivery should reflect the same thing, because it
Like the
might
5
change
books, the 10
yes,
pencils, the 5. Also, the delivery notes need to have that thing.
yes, because let's say for an example, you paid for those items, and then the delivery note says when you only ordered 5 books. So what happened to the rulers and the pencils? And you already
Meaning,
paid
it
for
means
it.
that they didn't include them.
But they should also let you know that these items will be delivered at this date, because now they are not available in our warehouse.
Okay, thank you.
Come on, that was actually great. Yeah, it's exactly like that. Thank you so much, guys. Um, yes, let us continue. Um, what else could go wrong now? Invoices are inaccurate, wrong pricing, quantity, discounts, and so on. So the difference between this and the first one is the first one, invoices are raised with no matching delivery. So here, it's how it was explained, which was basically that maybe it doesn't matches the delivery notes. But before we even see that it doesn't match the delivery notes, like we can see that the invoice that we got and what we received is not the same. That's what we are seeing first, right? And then it's like, yeah, that's why we need to make sure that's the controlling activity. Now we need to make sure that this is cross reference with this, which is the delivery notes and the internal sales or the ISO. So here in the second one is that invoice could have had some mistakes, where it's like a wrong price, a wrong quantity, discount, and so on, which could be a similar control, which is the invoice clerk. Now maybe the clerk comes in. The invoice clerk compares the ISO delivery notes, or slash delivery notes, um, details to the invoice. Checks price against the official price list. A second employee checks and signs the invoice before it is sent. So there's like now an additional layer just to make sure, obviously control objective accuracy, just to make sure that it is the same. So that is the difference between the first and second one. And here, and what's another thing that can go wrong is that invoices are omitted from the sales journals. So here, what can happen is the invoices, when they say omitted, could be maybe they're not there, not included. There's an error somewhere there. But I think when they say omitted from the sales journal, I believe that means it's not there. Those invoices are not in the sales journal. But it could also mean the latter as well. So what is the key control activity here? Invoices entered in numerical sequence in the sales journal. Control totals, which are like batch totals agreed before and after posting. Independent sequence check for missing numbers. So that could be like somebody who's who wasn't in the business of entering the numeric sequence and sales, journal. So they call like someone independent, right? An independent sequence check for missing numbers. What for? Completeness. Why is the other one accuracy and the other completeness? Completeness is because now we are putting these invoices in the sales journal. So in that way, that is like us completing the whole process of invoices. We give it to somebody, and then now the second one was us making an error in it. But then completeness is now us removing that invoice and putting it into the sales journal. So I hope that one makes sense as well. And then the last one that we see from here, like I said, there are more risks. And I keep on saying this because I think it's important. There are just more risks if you actually look at the auditing notes, which is the other risk is invoices are duplicated in the sales journal. So you see these risks that we see from here, they could just be errors, like different type of errors, duplication. You wrote this wrong, or the invoice doesn't match what I received, or the invoice is not entered into the sales journal. So those are those are the risks you'll be dealing with a lot in invoicing and so documents. So you see why documents are important. Like, see this. This is important. You need to know what this document is for and for what. Which where is it? Is it in the order department? Do we get invoice in an order department? Oh no, we don't get it. We get it from here. So this is important. Credit application form. When does this happen? And so on, so on. So documents are very important as well. Yes. Okay. And then what do we do here as a key control activity? Same numerical sequencing and control total checks as above. A duplicate breaks the sequence total and is flagged validity. So I hope that makes sense. I think it is. Seeing you guys explaining it, so I believe we can move on to receiving and recording receipts. Now the other ones are short. And then another thing that we still need to look at is computerization. So now, like, some things can be automated and things like that, to make this process easier. So like instead of maybe double checking certain activities, we'll see though. We'll see as we look at computerization, and as we're gonna look at computerization, my thought I'm thinking about, since now there's like AI, I can imagine how computerization will change. But we're gonna look at computerization. But it's definitely gonna change in a way that's like, wow, okay. Now there's gonna be like a huge difference because AI can do, I mean, it's growing every day, to be fair. So AI is now able to do more and more and more and more and more. But let us continue. Now we're looking at receiving and recording receipts. So here, the risk that can happen here. Payments received may not be banked due to theft or carelessness, right? So what is a key activity here? By the way, this can happen if it's like cash. So payments cannot be banked because someone stole the cash, right? I remember when I was working at a typo for like in December, and when people pay for cash at the end of the day, or maybe it wasn't at the end of the day. I was actually wondering if I also didn't really know, but the till will be cleared, and then that money will have to be deposited in the bank. So whenever that process had to happen, the the boss, the manager, that was there would ask someone to go with them. Why? Low key bodyguard protection. That's what it was for, because theft can happen, even in malls, in any way. Um, yeah, so that that could be the reason why like payments are not received. So what is the key control activity here? The key control activity is post opened by two people together. It's crazy actually. Sometimes I think I explained something that is like already written and I didn't even realize. But post opened by two people together, all payments recorded in a remittance register immediately. So pre-numbered receipts issued for all cash received. Cashier reconciles cash to the register before banking. That is true. Deposits reviewed by an independent senior employee. Control objective is completeness of cash and bank. Now, I think I understand this a little easier because yeah, like I said, I was working at like typo for vacation, and before we close the till or we take out money to now deposit, we don't deposit the money without checking the sales that we made. Like we check the sales that we made and the money we received. Okay, if we made this many sales in cash, let's see if we have that cash. Do we have that cash in this till? So that when the counting happens, we count. Before sometimes I don't so another way to see this is sometimes the store is closed. You go to the store and that store just closed, but you see people there, but they're at the till. Usually what's happening is they're counting the money in the till. They're counting, okay, this is how much money that is on the till, but does that reflect on the computer? Do we see that when we look at the till computer? And if it's the same with the cash in the till and on the computer, that's like okay. But if there's something missing, that's where it can get complicated. Maybe the money fell. That has happened before. But it's like, oh, just check. Like, oh, this money fell actually, yeah. And then you take that money. Oh, that money was actually like under the till or something. Those issues can happen. So that is the importance of the cashier reconciling cash to the register before banking, and then deposits reviewed by an independent senior employee. So basically, what my boss was doing is, I was like independent, you know. They are always advised to go with somebody. They can't go alone to the bank unless they have to, unless there's nobody or something. But I wouldn't even say preferably. You should go with somebody to the bank, because that person serves as accountability. Because if you're alone and you have the company's cash, anything can happen. If you want to steal that money, you can probably steal it. I mean, if you and the other person want to steal it, that could probably happen. But knowing that there's two people instead of one is a better control activity as well. So that is the first one. The second one is, what could go wrong is receipts are recorded but not correctly allocated to the right data or not recorded at all. So, what is the control activity here? Receipts are recorded promptly and accurately. So, promptly is like immediately, like quickly. Yeah. So receipts are recorded promptly and accurately against the specific debtor's account using the remittance advice. Period totals are posted to the debtor's control and reconciled to the cash book. What is this for? For accuracy and completeness. I think this one makes sense. Um, so far, how are things? You can say, yes, I understand. No, I don't. You can unmute.
I,
I think I heard Jacob say yes. I think so. What are the others saying?
Yes.
Thank you. All right. I'm assuming, yeah, others are saying
I
yes.
think so far it's good.
Okay, awesome. Now let us go to goods returned by customers. And then we'll check credit management. Then we'll ask at the end. So here, goods returned by customers. So what is the risk? What can go wrong? Credit notes are inaccurately recorded or credited to the wrong data. What is the key control activity? So here, credit notes are made out by the accounting department, cross-reference to the original invoice and assigned goods return note, and require sign off by super uh, a supervisory employee before being processed. Large, unusual credit notes to the same customer are reviewed by financial manager. There are also very important things to notice in these processes. Documents and people that are involved in that department. Um, Ash, I know my notes are hard to see, but that if something is like highlighted or like almost like there's like especially orange, if you see orange in those notes, it means it's the person, the people involved there you'll see credit manager, you see financial manager, you'll see clerk, employee, supervisor, and so on. You might even see CFO. I think there's a CFO somewhere. I don't know if it's in this cycle actually. I don't think it's in this cycle, no. But one of the cycles, you might find like CFO, stuff like that. If you look at inventory cycle, you see more of like warehouse people there because it could be like stock counts and things like that. But yeah. Now let's go to credit management. But those people that play those roles are actually important. The people, the documents, and then understanding that particular department. Now, here, if we look at credit management, so what could go wrong in credit management? An existing customer becomes uncredit worthy and continues to be granted credit, resulting in losses. I think this is a great example of like bad debts. This is our territory. We know this. So control activity is credit controller performs regular follow-up checks. Credit controller reviews age analysis to identify long outstanding balances at risk of non-payment. Validity. Debtors do not pay at all or pay late. Monthly age analysis reviewed by the debtors section, follow up by phone, letter when terms are exceeded. If unsuccessful, credit terms may be renegotiated or the debt handed to a lawyer for collection. Another thing that can happen here, like, you can, I mean, we know this in accounting, you can promote like the person to pay at a certain time, you give discounts if you pay within the credit limits and things like that. So those are also other methods that can be used. Yeah, when the debtor, to promote the debtor to not pay late. What is that for? Completeness, right? And collectability. All right. What else do we have here? We have risk. Another risk, the last one for credit management, is bad debts are written off without proper authority, or debts that should be written off or not. Credit manager reconciles all bad debts written write-offs to supporting documentation. Senior financial manager authorizes all write-offs based on an age analysis. Regular monitoring of the debtor's aging to flag accounts that should be written off. So you see, we see credit manager. you see people playing different roles, and then those supporting documents, you see financial manager authorizing all write-offs based on the age analysis. That's a document that is there. Regular monitoring of debtors aging to flag accounts that should be written off. What is this for? Validity and completeness. So that is the risks and internal controls. Like I said, this is not everything. There's quite an exhaustive, like a lot more examples and activities, but this definitely gives you an idea. Like, it's not even just idea, you know, but it gives you like a real good foundation of understanding the type of risk that you'll see there, and just knowing what controls are there. And you can even understand like why is there so many controls. It's to minimize these risks. That's the whole point. To minimize this and this and this. And if this happens, we need to know what we should do if that happens. Who is in charge of it, and so on. That is the point. When we looked at internal controls, there was segregation of duties, isolation of responsibility. That's why we see a credit manager coming in. These are all connected from lesson 1 till now. It's all connected. So if you study, don't study in isolation, but connect them, because you see, even this is connecting to FAC and everything. So yeah, let me drink water. So here I'm gonna look at legislation check. I'm gonna enter computerization. Yeah, and then I'm gonna look at the cash part of it. Then we're done really. After we look at this part, this part is actually quite like really simple, because we are looking at the credits, but even in the credit we saw some cash stages as well. So here some stages are skipped, um from the credit sales. All right, legislation check, the CPA and sales document. So here we see tax invoice. So tax invoice must show these things. Tax invoice must show a supplier's full name, registered name, and VIN number. Address of the premises. The goods and services were supplied from. Date of transaction, name and description of goods or services supplied, unit price of the goods and services, quantity supplied, total price before tax, amount of any applicable tax, VAT, and total price including tax. So here, worked example is a sample invoice from COPRO, so Cop Pro Limited, lists only a description and a total per line item, no unit price or quantity shown separately. So this is an example of a tax invoice that maybe doesn't show things that are mentioned here. Like an example, here is a sample invoice from CoPro Limited. Lists only a description and the total per line item. No unit price or quantity shown separately. No VAT registration number. No supply address. Applying the checklist above, the invoice fails to meet the minimum requirements because it is missing the VAT registration number, the supplier's address, the unit price per item, the quantity of each item, and separately stated line total before VAT for each item. Only the grand total, VAT, and VAT and total are shown. This is exactly the kind of gap an auditor would flag when testing the accuracy and validity of sales documentation. So here it can go deep to a point where like they just tell you that this is what the sales documentation contains, and you need to know that this is what the sales documentation should have minimum requirements, and if there's no VAT, registration number, supply address, and also what is written here, it is an important thing to flag uh, when testing accuracy and validity. Here, delivery notes often omit prices deliberately, and here it says think about why. Hint: warehouse, dispatch, receiving staff don't need to know prices. Due to their job. Showing prices on a document that travels outside the accounting department increases risk unnecessary. So, like for example, they're just saying maybe we shouldn't show um in the delivery notes we shouldn't show the prices because people can steal, workers can steal. Like let's say that box contains like yesterday we did a PS5. I mean, if you don't know the price of PS5, even if you don't know, you know that thing is expensive. But some things can be small but expensive. Like it could be like a memory card, but the memory card is like that memory card could be like a 5 terabytes memory card. A 5 terabyte memory card might be 10K. It might be more. 5 terabytes, 15, 20K. Um, yeah. So putting the price on it, it's almost like it tempts you to want to steal it, even as a worker working in the warehouse. So prices are omitted when it comes to the warehouse and dispatch, um, due to that reason. So now we are going to look at computerization of the cycle. I think this was quite simple. Obviously, this is a summary. It goes in depth in the auditing notes here, right? In the auditing notes, I'm sure there's different sections. Where you'll find this. No, I don't need to keep going. Alright. What you see here, receiving company, orders department, there are things that are said here. See documents recorded, the function of this department to record orders from customers and initiate action to file them, and so on. It's fine. You'll see that there. Sometimes I'm tempted to just go in there, but no, it's gonna be too long. But yeah. Now we're looking at the computerization of the cycle. So here, computerization is a real-time credit sales system for wholesalers. The key idea is computerization does not change what must be done. Like take the order, pick up the order, raise the invoice. It changes how it's done and recorded. Same functions, risks and objectives apply. The controls just become automated, programmed instead of manual. It's almost like for us, from moving from writing on paper, people now type. So you still need to write stuff down. It's just that now you're typing it instead of writing on paper, right? It's like WhatsApp. All these things, you still need to communicate with people. It doesn't change how we communicate. Maybe it does change that now we can put emojis and stickers and, and whatever. But we still, the main idea is that we still need to communicate. So you can even think of computerization in your own life, like having, instead of physical notes, now you have online notes, you have documents, it's on your phone. Um, yeah, and so on. There's a lot. Now we're speaking through a phone. We still need to speak to each other, but we're speaking through a phone instead of in person. So that is computerization, even when it comes to a cycle that happens. And also about how now AI can possibly play a way bigger role. I wonder what the next auditing notes will come. What would they write in computerization when it comes to AI? Because they probably will have a lot of editions every year, second edition, third edition, just because of that. But let's continue. So here we have the debtors master file, which is the heart of the system. The debtors master file is central to the whole cycle. Its integrity must be protected, especially right access, the ability to make amendments. Unauthorized amendments could add fictitious debts to record the fictitious sales or extend the credit terms limits improperly. Before we move, I want you to know that you have done something similar. When did you do something similar? Sage. In Sage, what happened? There were people. You remember when you change members, when you could change like the profile. I forgot who the names of these people, but one of them was an accountant. You saw an accountant had more access to Sage, but if
The
you're not
other
an
one was the
accountant,
supervisor.
right?
Mm.
Yeah, so you have done something similar where certain people have more access um to that thing. So that is what it's saying, that its integrity must be protected. And if you wanna amend things, you can only amend it if you like a supervisor instead of just an employee, and so on.
They also had passwords.
Exactly, their passwords. So yeah, that's the idea. Okay, so here a control step in the debtors master file, but here luckily you're not gonna touch with like a software called debtors master file. Here it's just to know that you can computerize steps. Yo, Sage. Sage was nice, but I don't know, it was just like too much pressure with the time we had, so I didn't like it. But anyway, here we have a control step. First control step is record on a source document. So what does this involve? It involves all amendments must be captured on a printed sequenced master file amendment form. So it's called MAF. No verbal instructions are accepted. Okay, authorize the MAF signed by two reasonable that's funny. Signed by two reasonable senior employees. So reasonable could mean people that actually are in that department. Reasonable it's very broad. It could just mean people that are maybe even involved in that thing, that know what they're doing. So signed by two reasonable senior employees, for example, the credit controller plus senior assistant, after agreeing it to supporting documents, which is the approved credit application for a new customer. And then here we have risk and log entry. Here in risk and log entry, this is actually quite hard to visualize, to be honest. But here, when it comes to risk and log entry, here you write access to the master file. Write access to the master file is restricted by user and ID, what Billy was saying in what we're doing in Sage. Here, restriction and log entry. Write access to the master file is restricted by user and ID password to one specific person in the section. Every amendment is automatically logged on a SQL log with no write access to the log itself. This is actually a great visualization. I was saying it's hard to visualize, but we actually did something similar. So if you want to visualize it, that is a great way to look at it, is that we did something similar in Sage where you're restricted access to certain parts of Sage because of who you were in Sage, due to your ID and your password, user ID and password. And then we have programmed accuracy checks. So here it's verification slash matching checks on account numbers, alphanumeric checks, range limits checks. For example, credit limit must be between 5,000 to 700, to 75,000. Mandatory field checks and dependency checks. For example, 90-day term customer may only get a low credit limit. So yeah,
Bro,
mhm.
bro. This thing like we did them, man.
Yes,
Also, credit limit of 5,000. I remember entering a credit limit of 5,000.
exactly. Like I ain't gonna see how Sage helped, yo.
Okay.
Yo, Sage helped.
it's like they interlink them with other modules
Yeah,
or something.
they did.
It's not one module only.
It's not one module only for sure. Cause even in Sage, you're
Mm.
seeing like, when I'm doing accounting, yeah.
Hey,
Yeah, so we did do this. We did do this in Sage, like, so this is, I mean, if we didn't do Sage, it was gonna hard to think how these things work. But because we are able to do Sage, that did help in us being able to at least visualize it and get hands-on experience with something similar. But yeah, now the last one is independent review. A senior staff member, like for example, a financial manager, regularly reviews the logs to confirm amendments. We did this as well. Amendments occurred, were authorized, and were accurate. Complete. The sequence of log is also checked for gaps. Yeah. So, if anything, remember Sage. Maybe Sage was hard, maybe it was easy, but you can know that this was there and it's just something similar. That you can be able to visualize when you think about the debtors master file. So it says why you can't just delete a debtor to commit fraud. With most modern accounting packages, you cannot fraudulently reduce a debtor's balance or delete a debtor directly through the master file amendments module. To reduce a balance, you'd have to process a fraudulent credit note, journal entry, or receipt to delete the debt, and the balance must first be nil, and the delete itself is logged to a user profile, which is isolated responsibility. Man, this all really connects even in auditing, internal controls and things like that. So here we're gonna look at order entry key automated controls. So here we're looking at things that are automated. I'm gonna end right here. One of the automated controls is identification and authentication. Order clerk. So think about the order department right now. That's what we're looking at. We're looking at now what are things that can be automated. So here the order clerk keys in the account number. The system matches it to the debtor's master file and pulls up the customer details, name, delivery address. The clerk asks the caller to confirm these details, never the other way around. Sometimes, I don't know if this has happened, but sometimes they say, can you say your ID number? Like when you go to a store, sometimes it's a call, or something. They ask for your ID number. Oh, can you state your student card? Or things like that. This is to identify you, to know it's this person, it's that person. So just even think about it in general life. This happens a lot. This happens a lot. When you go to Discam, receive me Discam, I don't have sometimes I forget my Discam card. And then I just tell them my ID number, and I say it, and then it works. some places, obviously maybe don't allow that or whatever, but there's different examples, and there's a lot of them where identification is just used by your student number. In the same way, us as students at Unisa, that's how they identify us, right? In order for you to access my Unisa, you need to enter your student number. Let's continue. Right, so that is the identification and authentication. Once it matches, the clerk um once it matches, the system matches it to debtor's master file and pulls up the customer's details. Your name then shows, and your delivery address, etc. Then we have screen 8, minimum keying. For example, one item code brings up description and price. Screen formatting, mandatory fields. For example, they are marked with like a red star. Alright. And then fields that can't be edited by the clerk, shaded, e.g. account number. So basically, yeah, they're talking about, if you think about in the computer things that can happen. This happened for me at Sage, because I wasn't able to do everything like properly. I don't even know if I got that certificate till this day. I don't know how you even check. I haven't gone after checking. I think I should have got it, but yeah, there were times where I wanted to edit something, but it was shaded because I wasn't that user, right? Because I'm not the user that has access to that thing, so it can be shaded. But when I'm now that proper user, that thing that was shaded is now unshaded, so it's those type of screen aids that are there, like minimum keying, like one item code brings up description, like maybe you write down that item code. So here they're talking about you in that software, in that computer. So yeah, hope that makes sense. And then we look at program checks.
Bro,
Mhm.
I think what you're trying to mean here is that those screen aids will appear if, for example, you are not authorized to do that particular work or something.
It depends on what is showing. If it's like the shaded, then yes. But sometimes it's there to just help you. So screen aids. The aids is
Yeah.
basically assistant. That's what aids. Unless you're talking about HIV. I don't know. That was different. But aids, like someone is
But-
aiding you. I'm aiding you, so I'm helping you. So
Oh,
yeah,
they're helping you to.
so
They're
what I'm
helping you
saying is
to. Okay.
it's not restricted to, this only shows when you don't have access. So I don't want you to think that way. I want you to be like, oh, this can also like help you sometimes by just writing the student number, right? We looked at it by just writing the student number. It can show you all sorts of things. You didn't now have to ask this person's, where do you stay, what and what module are you doing, right? If you're
Oh,
Unisa.
you mean, yeah, by just writing that thing can show you everything of that person.
Yes. So, screen 8,
What is
minimum
the screen
keying.
aid to do?
One item code brings up description and price. By just writing one thing, but by scanning the barcode, you see people work at tills. When they scan that barcode, they see everything about it. The price. They sometimes tell you,
Mm,
don't you want to get another one? It's on discount for what? Like, oh, let me go get it.
mm.
So, screen aids, basically. That's what it's talking about.
Okay.
Yeah.
Okay. Thank you.
And then we have program checks. This is alphanumeric checks. We have limits, we have reasonableness checks, quantity verification and matching checks on account and inventory codes. So these are like program checks where you can check it alphanumerically. You can check the limits and reasonable checks on quantity. So when they say checks, it's like you checking about like they're checking different things. To be honest, sometimes in Sage instructions could say, oh, check this and check that. So they are saying in the automated if you automate controls, you still need to check stuff, right? So you can do numeric checks, limit reasonableness checks on quantity, verification and matching checks on account and inventory codes. And then an automatic credit check also happens. The system instantly totals the new sale against the debtor's balance and compares it to the credit limit and terms. If it would be exceeded, the order is placed on pending sales order file awaiting the credit controller's approval. It is not automatically rejected since there may be a valid reason. I think that one actually makes sense. And then we have unique transaction number automatically allocates to track the order as it moves through the system and given to the customer to follow up queries. This is an example of I can give here, which is similar. Could be you buying something online and then they tell you it's out on delivery, and then when you check your order is usually like a long number with some alphabets probably in there, and that's you are able to track your order using that. So that's a unique transaction number. You know it's unique because it has those long, it's like small alphabets and long numbers. It's almost like when Google tells you wants to give you a password you should use, and then they give you something you will never remember. You'll never remember. They say, I don't know, bro, KK 15 what. It's like, I'm not saving that password. You know, because you wanna at least remember your password. Gotta forget it. But yeah, that's a unique transaction number. And then account holds. If a debtor has been handed to a lawyer for non-payment, the system blocks the order clerk from proceeding. Only the credit controller can remove the holder, and every removal is logged. So these are the key automated controls that happen in the order entry. So it's the same things, the same system, the same risk can occur. There can be even different risks because things on a computer doesn't mean that someone can't know your password, doesn't mean someone can't know your username and things like that. That's why we even have two-factor authentication. Someone can try to log into your Unisa, someone can try to log into your Google account, and how do you see that? They might even know your password. But what do you see when you have a two-factor? It's a OTP, one-time password or one-time passcode. Then there's those like 6 numbers. It just shows on your email. It's because they are trying to log into your account, but you have a two-factor authentication. In the future, we might see three-factor and so on. But that's a whole different side of computerization where people are decoding stuff and hacking stuff and things like that. So yeah. Now we're looking at the general control techniques used throughout the computerized cycle. Here the technique, the first technique is access control. By the way, again, this is in audit notes. It's there. It's there. So you'll probably see a little bit more, but you'll see more explanation. If you feel like you don't understand things in this document, auditing notes will make things clear for sure. So here we see access control. So access control, how it works. All users identity and all users identify and authenticate via ID and password. What they may do is governed by their user profile. We looked at this, right? I think they are low-key summarizing it. Comparison and reconciliation. The system reconciles receipts allocated to debtors against the total bank deposits, compares current period sales and data with prior periods, and produces exceptional reports. Another one is performance review. So how does this work? This works in supervisors can view the pending sales orders, right? To check for picking backlogs. So when they say backlogs, like, I mean back at the back logs is like recordings or things that have things that have been recorded. So backlogs are maybe those logs that are at the back. But it is low key a little simpler to say it that way. So supervisors can view the pending sales order to check for picking backlogs. Management reviews data, aging / days outstanding reports against performance targets. So this way supervisors can now check the performance with their sales, and also be able to review where management can be able to review the debtors, aging and assets, or how much they have to pay and so on. So that is what that is about. And then logs and reports. Logs of changes for picking slip, daily reports of sales orders received, and debtors exceeding credit limits. So those logs are able to show when there's a change in the picking slip, and maybe the debtor now can't pay because they've exceeded their credit limits, or terms. And the daily reports on sales orders, like how much we are selling and things like that. Other computer technologies in the cycle, right? We have EFT, right? I used to confuse EFT with ETFs, which is something else about like stocks and investing. But we have EFT, which is electronic funds transfer. So this is you paying via your bank. Like you go to your bank app and you put that person's account number, and then you pay them. That's an EFT. So customers pay directly into the company's bank accounts. The remittance advice / proof of payment must still be matched to the correct invoice. That's why people say proof of payment, send proof of payment, and then they can be able to match it. Electronic messaging, EDI, structured electronic exchange of documents. For example, orders between the company and its customers' computer systems. So what's electronic messaging? Yeah. So this is structured electronic exchange of documents between the company and its customers' computer systems. Okay. So this could be an example of maybe let me give a similar example. In accounting, there are different softwares if you're an accountant, and different softwares if you're an engineer, and different softwares if you're something else. So sometimes that could be used to communicate. Like for example, an example is people who okay, let me use this one. People who edit, like maybe they are like digital, but what is graphic designers? Graphic designers, right? If people are graphic designers, they can use like Figma. Figma, you might not know it, you might know it. Figma is where you can be able to design online together. You see how we are together here, talking? Great example is Zoom. Zoom. We're on Zoom together and we are looking at something here and we are discussing. So that could be a similar example. It's not the same. But it's a similar example of like messaging. But this is strictly for structured around like exchange of documents. So it's having that particular messaging system where you can now exchange orders there. That's what this is talking about. And then trading on the internet e-commerce, a wider platform to market and sell, but with added risk, payment, security, order authenticity, and data. Customer/card protection controls include encryption, secure payment gateways, and validation of order data entered by the customer. This is selling stuff online. When you're selling stuff online, there's a higher risk because you have to protect. There needs to be a payment security. So when you buy online, you usually see Visa, right? It's usually on your card. You see what else is it OZOW Ozo or something like that when you buy online. There's a lot of card protection systems and so on that are there. So those can be like higher risk because people want people's cards numbers. So you have to make sure that you protect people's card numbers. Like especially like card numbers are very important. As people lose their money and things like that. So that's why those controls will include encryption, secure payment gateways, and validation of order data entered by the customer. We have another example of
Bro. You said, is it OZW, OZOW?
OZOW. It's green, right? It's
Oh,
that green thing.
yeah, I
You know?
see it on the internet.
Yeah.
Secure pay by bank, online payment gateway, and bank API.
Yeah.
Yeah. It's the green thing.
Yeah, it's green. I think it has like a logo of a fingerprint or something.
Yeah.
Yeah.
Okay.
So that's
Thank
like
you.
a real life example of it. And then we have a point of sale POS system and barcode scanning. Yeah, we touched on this so much, which is the till is linked to the price list master file. So yeah, for the price in the inventory master file, scanning a barcode puts both automatically reducing key errors. You know, sometimes when you can't spell the barcode, they ask you the barcode number. Okay, what is it? What is the barcode? And then they write it down. So, in order to make less errors, that's where barcode scanning came into place because that barcode number can be long. So, basically, it's exactly that. So it makes sense. So you see, when it comes to like master file, don't let it like confuse you. What is now? Debit debtors master file. You see, inventory master file. You should think about like in the till. They have a master file to know what is on the floor, what is in that store. So a debtors master file is who owes us. That's simply what it is in simple terms. And then you have m-commerce, we have e-commerce, which is selling online. M-commerce is transactions initiated from a mobile device. Ah, oh wow, right? Take a lot, Amazon, same risk controls as internet trading applied to an app rather than a website. So e-commerce is website based, and m-commerce is more on that app rather than the website. So if you understand so far, look at computerization. That's what we looked at here. Say yes. If we didn't understand, say no.
Bro. So in other words, what you're trying to say is that e-commerce focuses on the internet, and then m-commerce focuses on that app, not the internet. Like trading on that app straight.
So it's better to say websites because we are on the internet. Internet is like just access, to data, right? Like data bundles. Once you have data, you're on the internet. So it's more like websites and app. So like software and app. So you could watch YouTube. You could watch
on
YouTube
an app.
on an app, but you can also watch it on the website on your phone. If you go to Google Chrome.
Oh, you mean
Mhm.
when you trade? maybe let's say you go to trade on take a lot on the internet and also
Yes,
take
there's
a
a
lot on the
difference.
phone.
Yes.
Oh, okay.
Yeah,
Okay, thank you.
that is the difference. All right. Thank you so much. Now we're legit almost done. We're just gonna look at cash sales, and then that is it. Here is just a quick reference cheat sheets to understand things more. So we are now here at the last stage. This obviously recording for those who are not there. Um, so it is going to be posted today as well. Yo, that editing, after editing, it requires like, I think this thing is long, so it's like an hour. So it had to like, I don't know, like when you edit, when you're supposed to export before you export, you must render. So rendering said like 1 hour 30 minutes, and it was 10. I'm like, I mean, I'm sleeping here. This thing was going to be ready at 12 date when I'm asleep. So yeah, that's why it wasn't uploaded. But I think it's already up. I just need to share it. But I don't want to leave the screen because I don't want to edit and wait for that hour. Anyway, let us go to cash sales. So cash sales follow the same broad process as credit sales, but payment happens at the point the goods are supplied. The defining risk of this section is theft. Cash is easy to steal, easy to collude over, and physically dangerous to hold. Armed robbery risk. Smaller businesses are especially exposed because they often lack the resources for strong segregation of duties or technology like CCTV. So, bro, actually, what does CCTV stand for? Now I'm just curious now, to be honest. Closed circuit TV. Why did I think it was like China something? In my mind, I thought China something. Wow, okay. Closed circuit. Oh, so, wow. I was definitely thinking like China or something. Somewhere that was China. Anyway, that makes sense. So CCTV is basically cameras. I mean, we saw the picture. Cameras. Alright. Alright. So stages of a cash sale. So cash sale, we have customers select goods and services. This is in the auditing notes, by the way. But yeah, customer selects goods and services, price rung up. So imagine this: someone paying cash. It's basically how we're imagining this. Price rung up, invoice created, and then cash handed over, receipts and change given. God may check the goods versus the receipts. Um, and then cash, and that's what, and then it's cash held until collection. Um, cash reconciled to the sales row, and then cash bank, and then cash receipts journal written out. Everyone, no, this doesn't make sense. It's this way. Yeah, it's this way. God may check goods versus receipts, and then here, cash receipts journal written up, cash bank, and then cash is reconciled to sales record, and cash held until collection. It was
Uh,
mhm.
bro, it's like, for example, let's say let's say I'm going to the shop, and after going to the shop, I'm taking goods, and after taking the goods, maybe go to the till and buy them. It's like we're using the cash, not on that first thing whereby you buy things on credit. Now we are buying things on cash.
Yeah, it is like
Okay,
that. So
okay.
it's now giving this. I think we even know the system. Well, this stage includes also like in person, which is like you held the cash until collection. I think a good example is the one that I was sharing when I was talking about working at typo where at the till you have to now wait, until you now go deposit that money and so on. So yeah, that is an example of like a cash stages of cash sale. So the 7 principles of a cash sale control includes physical safeguards. So here an example would be limited position exit points. Cash never held on an employee's person taken to a central secure point. Security guards, cameras, signage encouraging customers to ask for a receipt. So what they're saying is they should be a I should drink water. So what they're saying is there should be physical safeguards. Um, there should be cameras. There should be limited exit points. What they're saying is if you enter, if this is the entrance, that should be the exit as well, unless it makes sense. I'm sure you've seen this, where stores have like two. You can enter in 2 places. You can exit in 2 places. Like maybe one door's for entering, one door's for exiting, or maybe you have seen a place where you can enter in one door and even the other door you can enter and exit the other door and leave the other door. That is problematic unless you have even more safeguards, like you pay for 2 securities now, that watch both gates and things like that. Or maybe it's a big store, so it makes sense, right? You have to, because if it's a big store, it's either that entrance is very big, or you have multiple ways to exit or enter. But usually stores, you enter in one place, you exit in one place. That is on purpose, because if I can enter here and leave there, it's easier for me to get away. But if I know that they can be in the store, but Oksala, they're leaving here, there's no way to leave besides here, then that is the whole purpose of it, of safeguards. That's to help, to have those limited exit points. Right. Now we have independent record of every sale. So sales rung up on a cash register that keeps a running total. If manual invoices are written in duplicate, customer plus retained copy, a mechanical counter can track units sold, like for example car wash bay counter. So it's independent record of every sale. So there should be an independent record of every sale that is made. So all sales run up on a cash register that keeps a running total. That's what it's saying. So sometimes, wait, where do you see this? I want to think of I have an example, but I can't think of the store. But it could be like, you see people printing the, oh yeah, you see at the till, right? See at the till when they give you your slip. There's something that they also have. They like, you don't take the whole slip. Like you can cut it and they save it for themselves as well. So that is so that they have a slip that this actually occurred, and you have a slip that this actually occurred. Yeah, I don't know if there's no way I will see that, hopefully. But yeah, like you don't take the whole paper that comes out. See, after you've paid and then that thing comes out from the machine. You don't take the whole thing. The cashier or the teller takes some of it and you take the rest. They give you the rest. So that's what that is for. And then we have record must not be alterable. So no access to the till roll except supervisor or manager. Handwritten invoices are only protected because alternations are visible. Resetting a mechanical counter is restricted to the owner and manager. That makes sense. See, like for example, if you buy something and you're on the till and you're like, hey Shazzy, I don't want to buy this anymore, and then they call the manager. That is basically what that is. You know, we limit access to the tills and so forth. And then fourth is record must be sequenced. Till rolls date, sequence, and identify their register. Cash sale invoices numerically sequenced, so a missing record is detectable. I think that one makes sense. We have cash must not accumulate. So here we have a cash must not accumulate. Tills emptied regularly during the day to a secure area. Often a cash register changeover. Small businesses bank daily. So sometimes you see this in a till when a till is closed and you see people counting money. That's when a till is emptied to secure an area. Yeah, I'm sure you've seen that at Pick and Pay, Boxer, ShopRite, wherever you know, your family or you buy groceries. If you buy in those big stores and stuff like that, you'll be able to see them putting 5 friends together and things like that. So that is a great visual example. And then we have counted and signed for at every handover. That is almost quite very similar. When cash leaves a till, I'm sure I've heard the people at the till say hand over or something like that. I've heard that before. So that's where someone else, I think, is going to that till. So they make sure everything is good in that till before they give it to someone else. So hand over, when cash leaves the till, 2 people, cashier and supervisor, counted together in a secure back office, reconcile it to the till roll float, and both sign a pre-printed sequence reconciliation document. Neither party leaves the room mid-count. Yes. I even gave an example of that when I said I was working a typo where we used to count the money at the end of the shift, at the end of the day, and then reconcile everything. And that's serious. It's only 2 people, and it must be quiet. And yeah, they are doing the counting. And then, last but not least, is bank regularly and intake. Deposit slip prepared and agreed to the daily cash summary by supervisor. A second senior staff member agrees the deposit slip to supporting reconciliations and signs off. Cash is never used to pay wages, expenses directly. Extra detective techniques worth knowing. Cash to inventory reconciliation. Fast food outlets starts the day with 500 patties and end with 100 to 400 should have been rung up. If the till only shows 390 sold, the 10 are accounted for and some sales were likely not rung up. Utility to output checks. For example, a car washer's water and electricity usage should move in line with the number of washers recorded as sales. A mismatch is a red flag. Makes sense, right? POS, point of sale analytics. Modern systems report supervisor overrides and error corrections by cashier shift, which can reveal patterns worth investing. So here, apply it. The news extract about EOH links to premature false revenue reconciliation. Think through. Use the 3-step. This is something else. Example. All right. And then the last part is the role of the other components of internal control. The other role of other components of internal control here is control environment. What is this, by the way? This is that crime see the crime of the components of internal control, right? Here we focused on control activity and information system, but the other internal control components still matter. So everything is linked, by the way. So the control environment set by directors, managers, tone, for example, the sales manager, credit controller, debtors manager must enforce control strictly by fairly a debtor shouldn't be handed to a lawyer without first trying other collection routes. Prices must be fair under the CPA. Staff integrity around cash and confidential data must be high. Extra attention to fraud risk areas, invalid credit notes, and debt write-offs. So this is talking about what? Just the control environment. And then the risk assessment is formal. Overall market risk, pricing, selling methods, sales policy, informal. Each department assessing the specific risk in its own functions. Small entities. In small entities, this is mostly the owner slash manager's informal decision. And then the last one is monitoring, tracking over time whether the system as a whole meets its objectives. Prompt, correct delivery at fair prices, timely collection, limiting bad debts, done by period-based ratios, debtors, days outstanding, bad debt write-offs, the customer satisfactory indicators, complaints, credit note volume slash reasons, and turnover trends. So that is the end of revenue and receipts cycle. Like I said, this was summary. Chapter 10 explains it like really well, to be honest. But if you got anything from this, is that cycles are more visual than ever. Like if you can visualize cycles and you can know which document is used, who's the person that has authority in this position. We have the clerk, the audit clerk, maybe in the audit department and things like that. When a financial manager enters and so on, that helps a lot. So, yes. Do we have any questions? You can say yes, you can say no. And then, if you don't, we may end here. But future lessons for auditing. Yeah, I want to make proper notes. To be honest, as well. You see the notes that I have like written down. I feel like they are more proper than other notes. So I'll figure out a way to make it more proper, more helpful. But yeah, I hope you are able to understand, guys.
Can you just type it or use microphone like you'll be talking while the mic is typing for you? Because the handwriting,
Yeah, the handwriting there is. Yeah, I mean, I can maybe send pictures, but like, you know what? Hey, yo, typing that thing is too much. That thing is 22 pages.
no,
I will figure it
use
out.
use a microphone.
Oh, like I talk, I read it,
Yes.
and then it just transcribes, like it just writes for me.
Yeah.
That is also smart. Okay, I'll figure that out. I have a whole. I want to be able to send proper notes by next week. Maybe auditing will enter next week. But yeah. Anyway, guys, that's the end.
Yeah. Thank you so much.
Alright.
Thank you, bro, for the class. I did understand things.
Thank you so much for attending. Just how it feels, if lectures and people don't attend. Yeah, I can't lie. Like when I'm teaching, I now understand. I understand. Like even
No,
if
the
it's
problem is that
quiet in class, like now I
you,
understand.
I mean, what you're doing is good. You are giving like real life situations, not just what is in the textbook.
Yeah. No, I appreciate it, bro.
Like you made great examples there.
Okay. Now, thank you so
From
Yeah.
much.
from
Thanks so
from
much, guys.
yesterday.
Yeah. Now I can agree. Thank you, bro. Man,
Mm.
yeah. You see, this thing is training me to talk even more. I'm tired, chief. Talking for 2 hours. Ish.
And
Two
the more
hours, yes,
you,
I saw you.
the more
2
you
hours
teach,
now.
the more you
The more you
understand.
teach, the more I get better at talking.
So maybe in future you can even open the podcast, maybe.
Ivana. All right. Now, thank you guys. Ish. Let us end here. Good luck on assessment too. I think it's not gonna be
Mm.
bad. I know written
Okay.
assessment is soon, so auditing will have to come soon. But that written assessment, I think it will include 2 more cycles.
Can I,
What?
that assessment, it covers which learning unit?
I think it's 5 and 6. One of them is also long like revenue, but the other one is a little shorter. I forgot. I think it's gonna be inventory cycles. It's gonna be there. I forgot what.
Okay.
All right, but I'll prepare accordingly. Thank you guys so much. Yes.
Yes, sharp.
All right, sharp.
Okay.
All right, guys. This is just us teaching each other. We are no experts or anything. We can make mistakes. So if you see this video, it's just students learning together. So if you have any corrections in what we say, write in the comments. We are all learning. Anyway, bye. Yes.